Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're just going to go over the week, see how our higher lows are setting in, and double check to see if there's still that potential for the pump. Because, of course, in the last episode, I did mention we should be seeing some pullbacks, and that personally, not financial advice, I would have taken profit during the last episode that I published. And of course, to look out for Ethereum's pullback because, of course, Ethereum was driving the altcoins. Ethereum was just pumping. And if Ethereum had a pullback, especially it's a higher low, then potentially alts could just get hammered. So let's go ahead and see what happened. Sure enough, of course, this is Ethereum. And sure enough, what happened is that Ethereum broke down from that level that we were talking about. It did have its pullback, and so I'll just remove this one. And you can see it's now bouncing roughly in the area that I had this line drawn out. This, of course, isn't perfect. Maybe it could have been something like this, right? Something like that. Just kind of ignoring this kind of exuberant wick, maybe a little exuberance right there. And so now we're kind of operating off of this type of structure. And what I really wouldn't want to see is Ethereum breaking under 1200 right now. I'd like to see this thing putting in a little bit of support here, and then potentially we could have the opportunity to continue to go, right? And so, of course, we did see. I don't know if you really want to call this a higher low. Sometimes the macro structures are a little bit bigger. There is the potential to come back down here. I think Ethereum, as long as Ethereum doesn't break $1,050, that, none of this structure is really, broken. It's not like decimated or anything. However, I would like to see Ethereum to keep above 1,150. And so if you see it breaking down from 1,200, then you can make the decision for yourself, of course, whether you think this might be continuing to put in it's a higher low, low, higher low, maybe another higher low somewhere in this area, or if you think it's getting a sizable bounce. If I go ahead and just look at my indicators really quick, perhaps check the 6 hour, and the 6 hour is telling me that perhaps Ethereum is still a little overheated. It doesn't look like it wants to just, fall to hell or anything, but there is the possibility that it could continue in a downward way, just a bit. I wouldn't really put too much, uh, again, I wouldn't put too much stock in it. We're still getting kind of a little bit of a mixed reading here. And yeah, see, it will continue to rise above 1200, just like I was saying, just by eyeballing it. And then cross below 11, 1000, yeah, 1050. Yeah, so, the indicators are saying pretty much the same thing that I was saying, which is that we probably want to stay above, 1200 in order to just continue bullishly. If we break below 1200, then of course, kind of that bottom line would be $1,000 and $1,050. And of course, we could have some compromise here at 1,150. If you see it breaking down from there, probably it's continuing lower, and you can kind of front run that negativity, but the structure really isn't broken unless we break 1,050. So I think that's enough for Ethereum. Let's go ahead and go to the daily. The daily still has a fairly bullish outlook there. It has quite a ways to go. In fact, if it does maintain some bullishness, we are seeing softening on the MACD. Of course, the money flow isn't really that great. I would have loved to see this, just kind of pumping up here. Some of the oscillators are starting to soften, and so we, we are getting a little bit of a continuation in the volatility, which would suggest perhaps a pull to the downside, at least temporarily, sort of like what we were talking about before on the shorter time frames. But still in a pretty good balance for the potential to pump. And I think a lot of this might be just based upon the fact that we do have a lot of news coming out this week. You guys know I've been talking about the PCE data. And so, of course, on Thursday, we are going to get that PCE data, which basically is going to determine how we see inflation. And if inflation looks like it's getting worse, then perhaps the Fed is going to be super aggressive. If the inflation numbers are softening a bit, then the Fed might decide to do 50 basis points instead of 75 basis points, or maybe even go back to a 25 basis points regime, in which case you'd probably see the markets pump. So really pay attention Thursday, because this upcoming information is going to be really important. And you may just want to kind of pay attention to what the market's doing in case there are some leaks Wednesday night, or perhaps early Thursday morning in the AM. Of course, we should just go ahead and jump over to Bitcoin, because Bitcoin is basically the exact same situation. Okay, so we don't really have anything different going on. We do have some type of a bullish crossing going on in Bitcoin in terms of the MACD, but just like Ethereum, it is softening, and Bitcoin really hasn't gotten much action. It is putting in one of those kind of higher low structures that I was talking about with Ethereum in the last episode, and of course, just a couple minutes ago. And so, but I would expect to see it continue to the upside, continue to try to rally, unless it's just such a risk-off atmosphere right now that it dies. But really, what I'm looking is for this kind of fractal up here to be put in. So let me go ahead and show you what I'm looking at here. Just we've covered this a couple times, but let me go ahead to go to the 6 hour just to get a little bit more price action. You can see, and then let me go ahead and put on the Heiken Ashi candles just to color code that a bit nicer. And with the Heiken Ashi candles, you can really see how we kind of chopped around here after this initial dip and then a pop and then kind of a chop. So we had a dip and a pop, and then we're getting that kind of chop, right? This is not to scale. This is just my projection of how I think we could move based upon this type of movement up here. And so I told you guys, like, I'm not worried about this thing dipping down or getting rejected here. This is kind of the behavior of Bitcoin. It's very common. We have the EMAs totally stressed out, right? I mean, they're just like they're just all splayed apart. And so when you have your EMAs stressed out and splayed apart, you can't look at these type of formations as like head and shoulders where you're suddenly going to get a pop up. That's called a V-shaped recovery, and you need macroeconomic factors in order for that to happen. So what we're really looking at is just some type of soothing of the EMAs until they all get straightened out, a little bit more horizontal, and then you get the opportunity for those pops, right? And so for those pops, we are kind of like, let's go ahead and go back to the daily just so we can get an idea here. Our stretch goal would be to cross this 50 EMA or the 50 MA. Like one of those two would be pretty good. It does look like we're not really performing the way that I had hoped, and so I am going to have to just stretch this out just a little bit more. Now it's looking a little bit more like up here, whereas I was a little bit more ambitious previously. However, our levels are still remaining the same, and I don't think that I would really change anything about this. Similarly to the previous level up, we got kind of a pop to this 34 EMA, And so, if we could get a pop up there, I would be quite happy with that. Approximately 24,000. Personally, I would try to take this trade as soon as we can have some confirmation of leveling out here. Probably, buy some small position and then take the risk for that. And I think my first take profit would be approximately that 22,500-ish area, where that broadening descending wedge first started to break down. Go ahead and turn the regular candles back on. And then, of course, just as a stretch goal, get up here. And if we are able to get up, secure 24,000 and hold on to it, which is, we totally got rejected in the analogy in this area up here, then I would be quite interested in taking a little bit of a longer trade, perhaps to 28,000. And if I can go ahead and take a look at a little bit more structure here, maybe turn off that local zone. You can kind of see what I'm looking at here. I know this is a lot of lines, but let me go ahead and turn off the EMAs. What you can see is that we had this type of wedge here, this kind of a rising wedge, which did break down. And I would expect this type of rising wedge to perhaps break down again if we're not able to bullishly sit on top of it above that $24,000 area and then quickly secure this 25,000, right? So we really do need to get into that area in order to pump. And these lines that I have marked out are just the end of this month and the beginning of next month, because that's when I think that we're going to see a reaction from the markets to the PCE data. Sometimes it takes a couple days for it to sort itself out and to get an understanding of what the government's new policies might be, as well as for the market to price it in correctly. You're talking about billions, of dollars, and so it's just not easy to just do it within one day. But then you should see some reaction on the day itself, either negative or positive. And in this case back here, I believe that we had some positive PCE data and the markets did pump. They priced it in and then they said, well, maybe it's not good enough. The Fed actually came out with a stronger policy by the time that the CPI data came out. It was pretty clear that the Fed was going to increase rates to a draconian level, and so the markets fell. Well, what happens if this time the PCE data is good? We probably get that pop, and then because the Fed was quite aggressive last month, and then maybe markets have some calm. They just make a higher low, right? Which is this was a low, and then it made a higher low. And so we kind of settle into this area. And then we get the CPI data maybe a little bit later into July. And if that CPI data, let's just put, I think it's the 10th, somewhere around there, something like that. And if that CPI data is pretty good, then we might just be chopping around, sort of like this, right? This is kind of like a chop. This is just kind of a range here, a little bit of a wedge, but an indecisive wedge, right? So maybe we have an indecisive wedge for a couple weeks, and then if the CPI backs up the PCE data, then perhaps we could get that pump to the next level. So I'm not in a rush for this move, guys. I told you. I had this structure marked out. Everyone was saying, faces are going to melt because we're going to pop to 28K. The bears are going to be in disbelief. And, other guys are saying, oh, we're going to fall to hell. We fell to hell here. We're just going to fall to hell. Guys, I told you, the market is just waiting for the data. Like, chill out. Like, stop having such emotional responses to how other people are reacting in the market. And, who cares? Okay. It doesn't matter if sentiment is bearish or bullish. That is complete BS. Guys, I understand that there are high fear associations with the bottom of the market because bottoms of markets are scary, but you can always get more scared. Okay, things can always get scarier, and likewise at the top of the market, exuberance can always get higher. you know, or it can just continue. These are relative values. You guys can't judge bottoms or tops based upon sentiment alone, okay? Like that doesn't matter. And so just because people are getting bearish, extra bearish, like, oh, Bitcoin's going to zero, it doesn't mean that you have the right to get bullish. And just because people are saying, oh, Bitcoin's going to 100K or something, it doesn't mean you have the right to get bearish. You can be on guard, right? But wait for the data. And the data I'm telling you is the PCE data and the CPI data. Wait for the frickin' data, guys. Like, stop judging each other and stop like making fun of each other. This industry is really immature. You don't see this crap in stocks, okay? It's just that it's a bunch of kids. I mean, a lot of you guys like never dealt with this type of data before, and all you have going for you is the previous cycles of like sentiment. And so, you think like all these armies and championing and stuff, all that stuff, it's just garbage, right, for like college kids. So chill out. We're going to have PCE data. That PCE data is going to determine if we pump or not, and if my analogical structure ends up working out. And then we're going to end up having, somewhere, where this one broke down, we're going to have CPI data. And that CPI data is either going to give us that pump to the next level, or it's going to have us break down. Now, there is one case where we could pump up just almost vertically if the PCE data is just astonishingly good. In that case, maybe we could do like some type of quantum leap where this one was only able to get to the top of its range, right, that I have marked out here. Of course, this is my resistance area, so well, we haven't broken through it yet, so I'm just going to make it a dotted line, but I just want to emphasize that this is the real resistance here that I'm looking at, and that this is kind of the level that I want to hold. And so similarly, this was, we weren't able to get over this resistance. And this is the measured move of the descending broadening wedge. So again, our measured move is right up here to around 23,000, let's just say 500, okay? Just to be conservative, 23,500. And if we are able to pop up to there, just on like generally bullish PCE news, that would be great. All right, good enough. Good enough for the trade. Like we traded it and then it's over. Take your profit and get out. If you guys are doing measured moves on head and shoulders and crap like that, just try to break your profit up into multiple sections because you're very likely to be disappointed unless it's just the most amazing PCE data, and it's going to be based upon data. It's not going to be based upon some head and shoulders structure. Okay, guys, there are macro fundamentals at play here. Stop using woo. Okay, like we don't need to use woo in charting. This is going to be based upon fundamentals, the same as this structure was. This structure was not because of this structure over here. It's just the behavior of the market. The breakdown was the CPI data. The pop up was the PCE data. That's it. Had this been negative data, we would have seen a collapse earlier. Absolutely. Had this been positive data, we would have seen a pop up, right? And then people would have justified their TA based upon those things. But you know what? There was only two key moves here, and that was based upon data. It was based upon nothing else. And then this, of course, was just support and resistance, right? That's how we could come up with this kind of range. Same thing here, support and resistance, and then two data points are going to control our future. Everything else is just woo. Like you guys can just consult a crystal ball or something. But I can't tell you the future. Only Jerome Powell and of course the Treasury and the agencies in charge of that data are going to be able to tell us. Let's go ahead and just take a look to see where we are in the good old alpha channels. As always, I do, want to point out that we are in that juicy area. No one could blame you if you started a DCA policy while we are in these green areas. That's why I made this chart so that specifically so that you could avoid DCAing in where it's super hot, so that you could understand that there are two key breakdown levels that just are extremely consistent with Bitcoin, at least in the modern era, and that after this bloodline, the market has really been bled. And so, if you wanted to have a DCA policy, fine. Personally, I believe that this market is going to be coming down to approximately 10,000. Let's just say 14,000 to 7,500-ish. That's my belief. You guys can have your own belief, but it's based upon a number of different factors on the macro. And that's a huge scale to be thinking about, but it's also based in stocks. And so while we can absolutely get pumps, you see this pump from here all the way up across the yellow line, and then it came back down. Of course, we could get some type of pump like that and come all the way back down, and then perhaps we go lower, right? Like there's no like set direction. It all depends upon the data and what the Fed does and the macroeconomics, whether the war in Russia stops, whether the oil continues to flow, or if it continues to be blocked by Russia, if the gas is blocked, the natural gas. All of this stuff contributing to inflation, requiring higher interest rates in order to battle inflation. All of these factors have to be taken into consideration. And then there's even politics, because there could be midterm elections and there might be pressure on the Fed to lower rates at certain times, and so you could see little rallies that usually happens due to American politics, regardless of which party is in power. And so we'll see. This thing's going to meander about, and that's why I say it's a trader's market. Always be taking your profit, always be selling, always be taking your profit, guys. This thing can go lower. The world is very shaky. World War III is a real possibility. You know, these things happen in cycles, and the world hasn't had a very big conflict in a very long time. And the day will approach, whether it's next year or whether it's 10 years from now. Just the setup is there, okay, for conflict. And these great powers are going to want to negotiate their sphere of influences, because the old Cold War model just isn't cutting it anymore. And ever since the pardon me, just microphone issue. Ever since the war on terror, those lines, those political lines globally just haven't worked well. And we are going to see some pushback as the world becomes multipolar. And don't be surprised if China makes a play for Taiwan or does something crazy while there's all this activity going on in Eastern Europe. And while Europe and the United States are a bit occupied with Russia and Ukraine, because of course that would be the best opportunity for for China to snag something and increase its own sphere of influence, or perhaps just like set up military installations around the area, something that could trigger conflict. And so that's why you guys want to take your profit, put food on your table, put savings in your bank account, and make sure you're all right. Okay, like don't just idealistically believe in this market. We can go up, but we can also very seriously go down and hang out there for quite a while. And part of that is related to the super cycles that I've been talking about in commodities. And so if we take a look at, for instance, stocks, of course you can understand that I may have deeply negative targets, but I want you to understand like where that is coming from. It's not just nonsense. Let me get out of log. If we just take a look at this kind of super cycle and kind of the trend that we're in, let me take off this grouping. You can see we have a clear midline, and we're only at the midline, right? For this historical kind of channel that we have carved out here. And I think this is probably the best way to introduce you to it, right? Where we did something like this, it came back down, and then we're going like this. Yeah, I mean, sure, we could have a possibility to do something like this and then maybe come back down. But which one seems more likely? That we're just going to break down or that we're going to, pop up and make a new all-time high before breaking down? Under the current macroeconomic situation, probably the best we can think of is like sideways, maybe a little bit of a pop, kind of retest some of these upper levels here, maybe kind of a mid-level or something at best, and then continue our way down. And so, guys, I just want you to be very realistic about what this commodities super cycle is looking like. We're not done yet. Like, we're not done yet, okay? Yeah, maybe we get a pop or something, but look, I mean, I think we have a significant ways to go down. And of course, Bitcoin moves at 3 times the S&P. So if the S&P comes down 20%, it means that Bitcoin could have as much as 60% more to drop down, right? And of course, it could go 25% down. So if Bitcoin moves 3 times the S&P, then Bitcoin could lose 75% of its value, right? And so what is, let's just say 60% of a Bitcoin from like above 20K, then we could be talking about 10K Bitcoin. You know, what if it's more, we could be talking about 7.5K Bitcoin. If it's the most extreme circumstance, without going horizontal, because these prices do rise over time, which reduces the percentage, right? Like the more this chart gets stretched to the right, like the less amount, the less percentage it is to the bottom. And so, depending on how long this drags out, if we get a little bit of a relief and it kind of like softens the blow, then, just straight down, just if we just fell straight down, it would be like 33%, right? And then that would take away 100% of Bitcoin's value. But that would be terrifying, right? If we just fell straight down. And so most likely we're going to go to the right, maybe 25%, 75% of Bitcoin's value, right? Would be something like, let's see, 21,000. It would be like $5,000 Bitcoin, right? And then let's say we take a little bit more time, we get some type of relief bounce. Now there's always these little relief bounces and things like that. And so that it only ends up being 20%, and so there's like 60% down for Bitcoin. Then we could say, what's zero point 0.4 times, let's just say 21,000, right? So it would be like $8,000 Bitcoin. And let's just say that we have a nice relief rally, right? To like, let's say that we get that relief rally to 28,000, but there is 20% down left on the S&P, right? And so then we would be talking about something like $11,000 Bitcoin. Okay, so I just want you guys to understand that there are ratios at play, there are macroeconomic factors at play. Bitcoin is highly correlated to the stock market, and if the stock market is in this super cycle at the top and we're coming down, then it's just going to be very, very punishing for risk on assets like crypto and Bitcoin. And so, guys, be realistic. We're like only halfway down, and that doesn't mean it's going to lose 50% of its value, but you can understand that the market could lose like 25% of its value, right, on the S&P there. And on the Nasdaq, it could be something very similar. I've also kind of tried to, I put a lot of thought into this because I wanted you guys to be able to visualize it. And so, something like this, Bitcoin moves about 2 times the Nasdaq. And so if the Nasdaq went down 24%, 25%, then Bitcoin could fall down 50%. So what's 50% of 20,000? Of course, that would be $10,000 Bitcoin. If it fell 30%, then it could be 60%. So, what's 40% of, let's just say 21,000? We already mentioned it before. It's approximately that $8,000 area. So again, guys, if I'm saying something like 14,000 to 7,500 Bitcoin, I'm being very, very realistic. I'm not trying to scare you. I'm not being a meanie. I'm not being a bear. I'm talking about a commodities super cycle, and you guys can see this cycle. Okay, if you guys don't understand what I'm talking about, then you're probably just a bunch of kids. You've never even heard of the Federal Reserve before. You don't, you're only used to like freaking coin armies, and maybe that's why you use sentiment like the fear and greed index. Has nothing to do with the fear and greed index. Grow up and learn economics. Okay. So, guys, it doesn't matter what anybody on crypto, YouTube or crypto Twitter is saying. You guys don't have to continuously make fun of other people. They're just trying to sort through that stuff the best that they can. But in fact, this market is going through a commodities super cycle, and there are macroeconomic influences. Stop being childish. Stop being, just foolish about these things, because there's something else going on here. And I think that this is the clearest way to visualize it for you guys, and I hope that helps you, because some of you are just getting like kind of weird in how your perspectives are getting distorted by the length of this cycle down. And so here's one of the more complex ones. I did draw out some diagonals just to suggest where it could possibly wick to also. And so, if you wanted to DCA in as, the Dow falls, or depending on where the Dow finds support on this super cycle, it really, could make sense to consider that. Because again, we don't know if this cycle is going to lengthen to the right or if it's going to be sharp and punishing. Therefore, like taking these levels, you could actually end up being buying the bottom, because over time it would end up being the bottom, even if it looks like had we fallen straight down, we should have crossed through all of these levels. And so that's the beauty of DCAing in, not at the top, but at the bottom, right? And that's why I'm making these charts for you. Basically, these are essentially alpha channels for stocks, but same thing with Bitcoin, right? Same thing with Bitcoin. If you want to look at my alpha channels, for Bitcoin, I have to do it on a log scale because it's just too new of an asset and it just goes too parabolic. But again, like we're starting to get into those areas where we could DCA, and Bitcoin has never really seen the super cycle. But if we consider it, then perhaps you can visualize it something like this, right? And so where, Bitcoin was born out of the previous super cycle. And so we've only seen the upside. That's why my bloodline is so low, and why I can consider that we could possibly go even as low as 5,000, right? If we were to dip like straight down. 5,000. You see that, right? And guys, so I'm showing you the math. I'm showing you, the visual interpretation of super cycles. I'm trying to give you all the tools to understand where this market could go, and also why you can possibly start to feel comfortable DCAing in, because if the Federal Reserve does end up lengthening this cycle, then the bottom constantly moves up, right? Like these lines are all pointed in an upward direction, because let's face it, the economy isn't that bad. It's just that, we had infinite money spending during the Trump administration, and during the end of the Obama administration, and also in the first year. But it really wasn't. the problem is that that policy turned around, and so you still have to give Biden the credit that we are fighting inflation, and this is the first administration to really be fighting inflation in a very long time. So to be honest, it's a mixed bag how you want to see this. And you can blame him for a lot of things, but the fact is, this administration is fighting inflation, whereas the last two administrations just pretty much contributed to inflation. Then again, Biden was one of these guys who like helped rack up the national debt. But at the same time, the other political parties like did the same thing with like trillion-dollar wars in Iraq and everywhere else in the world, which really depleted our treasury. And so we should have had money to be able to spend on colleges. We should have had money to spend on trade schools, so that people could learn skills to get jobs. We should have had money to spend on healthcare, and we didn't because we were directly subsidizing what's now the Taliban government in Afghanistan, this Iraqi government in Iraq, of course, and all this other just junk, which we've squandered our national treasury on. And of course, the infinite money printing of $5 trillion during the Trump administration, which is now coming home. The chickens are coming home to roost, and we're paying for that in the form of inflation. So this is the super cycle, guys. It's popping, and we're following it on the way down. So that's why I wouldn't want any of you to DC up here. But if you did wanted to start DCing as we work our way down, that could be a very wise policy because you never know how this is going to get lengthened, or how politics or the world circumstance is going to inject, just a change in the market. Let's go ahead and go over to the CME chart for Bitcoin, because of course there is a slight difference on CME versus the 24-hour exchanges. The CME chart is the professional exchanges. It's not the 24-hour. So here's Bitcoin on the 24-hour exchanges. Let me turn off my alpha channels. Just get that kind of local zone. Both kind of ugly. Let's just leave this one on. This is kind of how it's going. You see this huge V dip here, right? But in the 24-hour exchange, of course, we have more of this kind of like it looks like a spoon, right? Like you're about to spoon the soup and take a test of it. Not so much of this hard V shape. And so you can see that we are just slowly building up those higher lows. And then we're very much struggling to put in a higher high. This is a lower high. Potentially we have another lower high if we get rejected here. And so what we really want to see is to kind of keep pushing up, and making some type of accumulation wedge where hopefully we crawl up like this and then pop up like that, and maintain this as an accumulation wedge, and not and try to avoid this becoming just another rising wedge that breaks to the downside. But of course, we are waiting for the PCE data. So again, take everything with a grain of salt. I do believe this upper pattern could just play out exactly the same, but it's going to depend on two key data points, the PCE data and then the CPI data. PCE data could pump us up, and then we could kind of like chop around, and then the CPI data is either going to carry us forward or it's going to crash us down to hell. Again, let's see, going back to stocks just to see on the lower time frames what we're playing around with. We are having the opportunity to fill in these CME gaps. We do have bullishness on the charts. Just want to see, do we have the MACD crossing over on the daily? And we do. Okay, so for the S&P 500, we do have some type of bullishness in play, and we have that kind of continuation move. Perhaps it could take us up to these trend lines that I have drawn out here. Perhaps, up into this area. Let's see here. There should be a line like this. This would be a natural resistance point based upon this trend line. Maybe something like that. Like just kind of in this area around 400 on the, on SPY. And then, if we're able to break above that, then I guess we would have some type of resistance up in this area around maybe 430 as kind of a stretch goal, right? Kind of a stretch goal for us. And then we would be able to fill in those gaps on SPY. In case of the continuous contracts, same thing here. We can just see that, we do have this kind of smaller resistance right here at 4,050, and then we have kind of a heavier resistance at 4,250-ish, let's say, where we're most likely not going to break this trend. There is the potential to break this trend, and we do have this kind of this a bull flag formation going on here. So if I was able to just make these a little bit more, a little bit more easy to see here, then perhaps this is going to be some type of bull flag that takes us up into this area, maybe 4,100 or perhaps higher, right? Because it could have a chance to double check again and perhaps go again. SPX, just same thing. We've just got the same thing going on, right? And so we do have these levels to monitor and kind of a resistance in this area. But we are filling in some gaps, and hopefully we can stretch for that one at 4,000 at a minimum, if not perhaps that one at 4,250. I believe that's only like a quarter day gap or something. I might be wrong. Yeah, I don't put too much stock into that gap. This one up here is the more significant one. So I'll just kind of diminish this one. Not really important. But this one is pretty important, and I would expect us to make that attempt for 4,000 on the SPX. Very similar things going on the QQQ, basically the Nasdaq here. So let's go ahead and just take a look at our lines. We've got some resistance right overhead. We got deflected off of that. We are struggling in that area, so not sure that we are going to be able to break through it. But these things do tend to, surprise you, and so we do have some type of potential. Well, the bullishness is kind of wearing off. Let's see how the day is going. The day has a fresh cross on the MACD, so yeah, I think this could continue to go. There does seem to be a little bit of a trend line here, but perhaps it can squeeze out a bit more, and let's just see if we can get some bullishness again on the Nasdaq. Just bumping our head into resistance, that resistance that the S&P is kind of looking forward to bumping its head onto. We are partially filling in this gap, and so it would make sense to just give it another go and try to fill in the rest of it. But just be on the lookout. We are getting heavy resistance here, and so as far as the riskier side of the market, maybe maybe this is going to have some work to do. Yep, a little bit overheated on the daily, and so we'll see. Let's look for a pullback and see if we can pop back up, perhaps coming back down to support, or you know. Mm, we are freshly crossing on the ADX, so I don't know. There's potential here. I'm not ready to give up on this move yet. But yeah, it is very soft. Like everything is looking very soft, very weak. And hey, guys, maybe maybe Nasdaq is just waiting for that data, right? Same as Bitcoin, just waiting for that data. This isn't the most bullish look here, but you can see this thing can happen, and then you can get another pop up, right? Another go. So maybe we get another go. Let's see how this one is looking here. Yeah, I mean, this one looks actually better. Let's kind of make it a little dotted line. To be consistent, let's make this dashed. And you can see, although we bumped our head on this, perhaps you could consider that we actually did break above it. Bullishly, we retested it. Either retested it or maybe are retesting it. And, we're just at resistance. There's kind of this kind of little resistant area here, probably something. Yeah, look at this, that big old wick back there. A couple of these guys, just kind of like a lot of resistance in this area. So if we are going to be bullish, maybe it's just going to take a little bit of work for us to push through this. And it looks like it's trying. This looks like a pretty good try. You see, this one took a couple tries. So let's give it a couple more days and really take a look at what that PCE data has to say. Um, this one also is looking. mm, just really soft, guys. Just really soft. Yeah, I think all of the market is just getting ready to be able to turn down or turn up, depending on depending on the news. But I still classify this as bullishly postured, perhaps having a bull flag formation, kind of like a, you know, attempting to be printed there. But you could have said the same thing for this move, and so I don't want to discount that. This line has been pretty good rejection so far. It's been very difficult to get above it. But if we do, that's going to be a great sign. So take a look for that sign there. Let's see, just going over to the regular Nasdaq, almost the exact same thing, right? Just don't even need to really be doing all of those ones. Just it just gives us a little bit of a nicer view. This one is interesting because its lines of sight here, its resistance lines are much closer together, suggesting this move maybe doesn't have that much more to play out. And so, but at the same time, if we were able to secure this area and break out, then that would be just that would be pretty bullish. That would be pretty bullish. So not sure how to draw this one exactly, but we are looking, we got a couple different spots here. Just wanted to see if it was, bouncing on the line or if it's, well, I guess I'll just mark it there. So let's be realistic. And let's just see if we can break this area and maybe even use this kind of like a bigger kind of macro line as support, and that'd be pretty awesome for that one. I can also show you the the big channel for this one, and you can see that we do have these lower levels that we can kind of consider. These would be my targets, especially these two. You could probably count this area as a small DCA area, but personally, I'm skeptical about that. I do think that we would continue to break down, but you can see this line is actually um, fairly well respected here, even though we did get that breakdown during COVID. And so, this one, it just can't be totally dismissed there. But and if we do have a very similar type of black swan, then perhaps down here. Let me just double check to see how far would that give us to fall. Let's see, we're all the way up here. So that would be 20%, 20 to 25%. And then that would suggest about 50% to fall, 40 to 50% on Bitcoin. And then if we came all the way to the bottom, say it takes some time, so 30%, so that would be 60%. So again, like even though this structure, they all have a little bit different structures. Even though these ones are all Nasdaq, they all have slightly different structure. These ones are all, S&P 500. They all have slightly different structures, but they're all suggesting very similar targets, either like 50% down or like 60% down on Bitcoin. And so I want you guys to just keep that in mind. Keep that in mind as a strong possibility. And that the only thing that could really prevent that outcome is if we go sideways for a while, and then the lower numbers become more and more likely. Let's see. Pardon me, not the lower numbers, but the lower percentage drop becomes more and more likely. So the higher price becomes more likely. Dow Jones, very similar type of setup here. Again, we're just in the top half of this kind of super cycle, right? And so we do have, potentially this far to fall. And then, of course, we do also have a very similar setup to the previous Nasdaq chart, where we have this type of heavy support area down here. It's been respected pretty nicely. You do see a breakdown right here, and you do see a breakdown right here. So we can't really call it the bottom, but it is nicely respected. And if we did get a bounce there around 24,800, then that wouldn't be unexpected. And then we also have this really well respected area over here with a little bit of a drop here, right? Kind of aligns with the top of this channel. And so, if we did get something in that, let's just say 29,000 to $27,000 range, perhaps 28,000, 29 to 28,000. If we did get some type of nice bounce, off of that region, that would be, something to consider as possible before continuing on our way down. And that could take us sideways for a bit, which could help the market, raise prices and lower the amount of overall percentage we drop. The Russell's, also in the same boat here. Just looking to kind of pull up. We are in this kind of a heavy support area, but let's see if I have the group lines for this one. Yep, I do. And for the Russell, it's a pretty easy chart actually. Like this is probably the easiest one out of them all. You can kind of see this kind of cycle. Right? And then the COVID money, the free money just went to craziness. And that's why we have to come all the way back down, right? Now, could this one also get perhaps a bounce off the midline and then we extend things and then we go, yeah, sure. Or we could just continue to go down, right? It just depends on the market. This thing can do either. But you can see, right? Like this is just insanity up here. That's why that stuff, that's why when people were saying to DCA at the top of the market, it's just stupid. Let's see here, guys. I hope this is giving you a clear picture of the super cycle. I've tried to explain it to you multiple times. People just thought I was being a perm bear or whatever, but I think you guys can visualize that super cycle now that we're coming down, now that the just up only, kind of mentality is totally broken. People going insane, losing their minds over that, broken up only ideology. But, what goes up must come down. And that's just a return to the mean, right? So we covered stocks pretty nicely. You get an idea of what to look for. Let's go ahead and just check out perhaps a couple of these just factors that can kind of influence here. Just the VIX. VIX just going it's at the trend line now, right? It's at the trend line, and so perhaps it's going to increase. Who knows? If we have a breakdown, that would be really nice. But just gonna want to watch to see if we get a hard bounce here or if we break down. So I've been warning you about this for a while that most likely we'd be coming down to the trend line and that trading would be a little bit easy during that. But if we suddenly bounced up, don't get surprised because that's how it's behaving inside of this wedge, right? And if we suddenly get a bounce up. Other than that, it would be great if we could get lower volatility, but if we break up, then it could perhaps just make things pretty difficult on us, okay? Let's go ahead and look at the dollar. Dollar seems to be recovering. It did hold my support line. And so, um, you know, we had hoped that it would continue to come down, but it looks like it wants to just shoot back up. So what can I say? Oh well, it's going to make it a little bit rougher for trades. It's not easy with the dollar rising to just to try to be trading. Those trades are often everything in the world is paired against the dollar pretty much, and so if the dollar rises, it just has a huge impact on a lot of things here that make trading not easy. I am getting a bit tired today, so I think I'm going to end here. Um, let's see, is there any last thing that we should probably take a look at? I guess we could just see very quickly Bitcoin dominance doing the same thing that it did over here, just coming back down, but it is coming down quite sharper. I do have to move this arrow down. So hopefully it's going to find some support in this area, sort of like it did on this bounce during the previous cycle. Where we had this kind of like a floor and then like a pop up. We had a floor and then a pop up. So I was expecting it to catch here, but it might just catch down here or maybe even revisit the bottom. This cycle, everything has been much closer to the floor just because of how many altcoins are in the market. And so we're just going to pay attention to this. It does seem like it wants to continue to come down, at least on the weekly. How about the daily? On the daily, it is trying to find some support, but it also looks like it's bear flagging so that it could potentially drop down, right? Let's see, USDT. USDT up. Look at that. Respecting my channels perfectly, almost perfectly. Boom, boom, right? So I really hate that USDT plays out this kind of way. It shouldn't, but I guess this is such an algorithm-driven market that these things happen. So, it's coming back down. Does that mean it's going to be trapped in this area and perhaps we can explore the bottom? That would be very good for trading. Just gonna have to wait and see. Hopefully it doesn't pop back up like the dollar did. If it pops back up like the dollar did, that's gonna be not great, right? And I'm even considering if this is really a hard resistance or not. Maybe this was the hard resistance. And yeah, I'm gonna make this a dotted line for now, just until we can prove it. Let's see here. Okay, I think that covers all bases. Let's go ahead and call it a day. That was your alpha for the day. Stay safe and happy trading.